Hi and welcome to the market alert for Thursday, the 12th of August 2021. So as it states here, small caps, crude oil and the yield curve dump and pump as soaring CPI and COVID cases stall. That's the main headline for yesterday. So obviously you're all aware that the inflation figures came out as they were more or less forecast there. You can see that from the Forex Factory website there. CPI, the core, was down slightly, giving a bullish tone to the markets, which in turn sent the implied volatility down from 1367 to 1329. They're not seeing too much of an issue there at the moment as far as the upside is concerned, but then they haven't seen that for 13 years or more. So let's move on, have a look at the market's reaction to all of this. I'll start off with the Dow, pick up the daily chart. You can see we've got a new all-time high for the Dow yesterday, obviously used to move the market through and to the new high, because inflation is no longer a problem. It is transitory. We didn't see the scorcher that was forecast by Wall Street, and this was good news for the market. It's always good news for the market, as prices were then pumped to that new all-time high of 35,499. So 35,500 is just short of there. And in the 30-minute chart, you can see that it was just vertical following the news. This is 2 o'clock bar here, news out at 1:30. The bar starts at 1:30, and it was straight up all the way for the day and just holding there for the Dow. Similar picture in the DAX. There you see we have a new all-time high as well, 15,891, heading to 16,000, which is just up here. You see the market retracing slightly overnight, and I wouldn't be surprised if we don't see some sort of retracement during today's session. We've also got the news yesterday. We started lower there yesterday, coming back to the 200 MA in the 30-minute chart. Market retracing, and then we take off and we put in that high of 15,891. The market's been sideways overnight, sitting there, but watch the DP level. There could be some profit taking. Market, when it puts in new all-time highs, the next couple of days following this can be sideways to lower, as you'll see here. There's the sideways, and then we ended up lower. And as the market comes back, we had 2 days there sideways as well. And you go back and have a look. I've been through this before many times, how this works. And you're seeing that weakness overnight there at the moment. And we'll just have a look at this in the 2-minute chart. A bit more detail, getting closer to the music. Let's just see where we roll over. This is where it starts. So overnight, we've got prices sideways. There's not much I can say about that, really. Just below the 200 MA, might have a test down to the DP level. But yeah, just very quiet. But then it was really quiet in the afternoon once the market had made the decision during yesterday as well. Meanwhile, in the metals markets, silver still under pressure. I didn't make a lot of difference. We can see them buying back in again yesterday. But if we have a look at the gold-silver ratio, you can see that we're still moving to the upside as far as this is concerned. And the all-time high on this, we go back, see if we can do it this way, was last year at 125. This was a gift from the gods, and it was a no-brainer for me. I just went out and bought more physical silver. And then we saw the move to the downside, which then narrowed the spread and the increase in the volatility, in the silver price. It soon reversed rapidly, and that's once you get to these extremes, you know you're going to get a move. So bring it on. Like I keep saying, I don't mind if we go back to 105. I'll buy more and add more to other positions as well, because eventually when this breaks, then you're really well positioned at low levels. So that was the silver's reaction to it. Let's just have a look at this in a bit more detail and just grab the chart again. Let's have a look at a 5-minute chart for yesterday. Well, I should go for a 15 if we've got it. No, I haven't got it anymore. Let's just go for, there you go. You can see the market's reaction to this. The market spiked when the inflation figures came out, came back at 78, went up, just did through the resistance to the left, came back, did another 89.78. You can see how they were playing this yesterday, back to the 200 MA, and the market's just drifted sideways. But looking at the daily chart, for me, there's still more on the downside yet as it plays. They're going to use that opportunity if they can do anyway. But it just doesn't, again, it just doesn't feel right. And the news that they're pumping out at the moment suggests the same as well. But you never know. Could be a distraction, or, look over here while we bring it back. There's always that potential as well. So I'll be looking for ways to actually enter the market. I have an ordering down at $20 an ounce, just in case we had another overnight liquidation by a fund that couldn't meet the margin call, which is what is being alleged for Sunday night's slam of the silver price. So here's the upside potential targets before they run out of steam and then retrace. I'd be more interested in an 89% retracement from here and then back down to this sort of level for the upside. That would be more interesting than chasing the market as it is at the moment, because you could be chasing it into a fib and then watching it reverse. Meanwhile, in the dollar is down for yesterday, of course, because the inflation figures came out more or less as they were forecast, taking the pressure off interest rates, hence the dollar moving to the downside there. So yesterday's trading session was a bit more lively than I thought it would be. I was not at the desk, so what I'm about to show you will just be a run through. I have a project on DIY project, so I thought, well, the market's probably not going to do a lot, so I'll go and get that completed. Here you can see that we had a sell signal followed by a buy signal. It looked like they were going to bring the market back off this, but again, what news did they have in order to do that when the market was waiting for the CPI? The market traded down to the BRN, and once prices closed back below the 5-bar moving average here at the close and got through the DP, it was a matter of just staying below the 5-bar moving average until prices hit the S1 and then start to close back here as the shorts take profits, and the market is then brought back above the DP. We always want to get back above the DP if possible, and prices moving to the upside there and then becoming sideways. Again, you can see the play here all the way back to 78% retracement. You just get used to eyeballing these as prices then made their way back to 89 and then traded sideways. Let's move on through to the main event of yesterday, which is obviously the CPI figure. So let's just run through this, and somewhere here you'll see the market's reaction as the news came out. A quick spike to the upside, and we had core CPI slows as soaring used cars and rent costs decelerate. Energy costs increased the most, along with new cars apparently. So yeah, a bit of an anticlimax. Again, it's one of these, let's ham it up, and then it comes out exactly the same, just to keep people on their toes, and then you can see the market's reaction. We go on then to make a new all-time high in the German DAX, and that's as far as it went. Again, this is what I'm saying about, when you get these new all-time highs that are pumped up on, let's face it, it wasn't really good news, it wasn't bad news, and they used it nonetheless to drive the market back to the upside. Again, you see the DP being tested there, and then off we go. And the prices never looked back apart from one close below the 5 there and then back, and then it was just a matter of the weakness coming into the market there. So prices just drifted sideways and moved to the downside. Then we had the crude oil inventories, which I didn't look at yesterday, and prices just drifting sideways to lower there. So like I say, a bit of an anticlimax, all things considered, following the release of the CPI figures. Okay, that's just a quick roundup of yesterday. Let's see what the market reacts and how it plays out today following this news from yesterday. Just before I do finish though, let's have a quick look at what's in store for today. It's all UK news. We've got GDP prelim at 7 a.m. This will be an interesting one, actually. 4.8. That's a very interesting news item. So if that comes out at that price, then the DAX is going to motor to the upside on the futures market at 7 a.m. Anything less than that will be an interesting reaction to see if prices will then go to the sort of sideways to lower. The news is not out for another 40 minutes as I'm recording at about 6:15 this morning. And then US, we've got PPI at 130. Again, this showing a slight increase. This is I'm didn't realise they got a forecast out that high for that. I'm slightly distracted by that. It will certainly be interesting to see how that pans out. That's for sure, because we haven't seen anything where near the 5% there. So 4.8 seems slightly ambitious, but I'm sure that with the best will in the world and a bit of number crunching, you can get close to those figures if you wish to do so. But wow, that's some forecast. I'll be keeping an eye on that one. Okay, that will do it for this one. I'll get this out, and hopefully you'll get it before the 7 a.m. news, so you can watch it as well. That's it for this one. As ever, thanks for watching. See you in the next one.